Whole House with HH Insurance, and today we wanted to reach out and talk to you about a common question that we get, which is what is a citizen's takeout? And so, if you've read the paper lately or you received one of these letters yourself, many people across the state are receiving letters that a private insurance company wants to take your policy out of Citizens. And so today we want to give you some additional information to help you understand what this means and make the best decision for you. So, to get started, we see a lot of headlines about this happening across the media. With an article of more than 300,000 policyholders are up for a takeout, and then another one talking about how things are looking up for the Florida insurance marketplace because carriers are wanting to do a takeout. So, what a takeout is essentially when a private insurance company removes your policy from Citizens and becomes your insurance carrier. So here's some additional articles on here. An October article of 168,000, an August article of 100,000, and so just quick math on that. That's 300 plus 168 plus 100. That's like 500,000 potentially affected policyholders within Citizens on these takeouts. And so, what is Citizens and why are they doing takeouts? So, Citizens Property Insurance Corporation is commonly referred to as Citizens Insurance, and it was designed by the state of Florida to insure of last resort. It was created by the Florida legislature to provide property insurance coverage to homeowners and businesses that are unable to obtain coverage from the private marketplace. It was established in response to the difficulty many Floridians faced in obtaining coverage, particularly in high-risk areas prone to hurricanes and other natural disasters. With that being said, one of the key words there is the last resort part, and Citizens is seen as the last resort option for policyholders. But and that in the state marketplace that we have had for the past couple of years of drastic rate increases, coverages being dropped, people unable to get homeowners insurance, Citizens really became the market of first resort. However, Citizens is basically reset itself now that the Florida legislature has made some reforms that encourage the private marketplace to come back into the market so that Citizens is no longer the option of first resort, but it's getting back to truly being that market of last resort. So, what is Citizens and why are they doing the takeouts? So, the first is the financial risk. So, a large state-run insurer like Citizens can accumulate substantial financial risk. In the event of a major catastrophe such as a hurricane, the state may be on the hook for significant claims payouts, potentially putting a strain on taxpayers. Unlike the federal government, the state cannot print money, so this could affect the financial viability of the state of Florida. I want to be really clear with this that Citizens is not guaranteed by the state of Florida, as many people think that it is. However, if Citizens were to go insolvent, the state would be in a very tough position to not provide financial assistance to Citizens, but that is not a guarantee of your Citizens policy by any means. Assessment liability. So if Citizens runs out of money, what it does is it can assess policyholders all over the state to make up their budget shortfall. And so even if you don't have a policy with Citizens, you can still be on the hook for this. But if you have a Citizens policy, you can get a massive assessment after a hurricane, even if you didn't have a claim. And so you could go claim free from the hurricane and still end up paying, not double, but close to double your premium because of assessments. And then market distortion. A large state-backed insurer distorts the private insurance market. Basically, what happens when this occurs is that basically Citizens became cheap within the marketplace because it was somewhat of a political football. He wants to raise rates politically on a consumer, but it's not healthy for the marketplace to have Citizens be the largest insurance carrier in the state of Florida. In my opinion, Citizens should be at the size of probably about 300,000 policyholders. And so that means that it needs to shed close to 1 million policies to the private marketplace. And now that there are, private market alternatives, Citizens has started to shift some of their policies over to the private market alternatives. So what is a so takeout is a process in which private insurance company, also known as a takeout company or assuming company, takes your policy out of Citizens. Takeout process is basically an effort to reduce the size and risk exposure of Citizens and promote a more competitive private insurance marketplace. So what does that really mean? That essentially means that Citizens gives their list of policies out to private insurance companies, and then the private insurance companies pick policies that they find to be profitable at the private insurance company's rates and say, hey, Citizens, we would like to take this policy out. And the policyholder gets a notice. And if the private insurance rate is within 20% of Citizens' rate, the policyholder is forced out of Citizens. If it's more than 20%, then the policyholder has the option to take the non-Citizens policy, or they can stay with Citizens. But if you do not respond to the letter, you are forced to basically exit Citizens and go to the private insurance company's potentially higher rates. So how does it work? These eligible policies, Citizens basically helps private carriers identify the policies that they can take out. The policyholder gets the notification, and then the policyholder gets that choice. Again, if the policyholder does not take action, you could end up with a substantial rate increase. But I would say that we at HH Insurance, kind of operate under the philosophy that if the rate is close to Citizens, even if it's slightly above that 20% mark, we do recommend in most cases taking that takeout offer. So from there, if once the policies are selected for takeout and they're basically assumed by the new carrier, the coverage transitions to the private insurance company on a specific date. It does not basically have to coincide with your renewal date. And so a January takeout could have an August effective date policy on it. This is really nice to the policyholder because there's no interruption of coverage, there's no interruption of premium payments or anything along those lines. And so what should you do as the policyholder? So really what we would say is you want to review your options and consider what the best choice for you. As an agent, we typically recommend the takeout option if the premium rate is similar to Citizens, especially for higher value homes or homes in flood zones. Citizens does have limited coverage compared to most takeout options, and within those options, you could also face the assessment liability of Citizens if you stick with Citizens. So I'll give you two examples of why you should think about the takeout. So one example would be if you are a homeowner and you have a pool with a bird cage or screened enclosure over it, and you have a policy with Citizens. Citizens actually does not cover screened enclosures. And so if Homeowners Choice or TipTap, as an example, send a takeout offer to you, they cover your screened enclosure. So you're getting a significantly more comprehensive policy, typically at a pretty similar rate. The second is flood insurance. So in 2023, Citizens started to require that all homes in flood zones carry flood insurance. Now, that is typically a good thing. But one of the things that happened is it also required that you have a matching level of contents coverage. Often, flood and homeowners contents coverages did not match. And so, as a result, many insureds had to increase their flood coverage limits, driving a significantly more expensive premium rate. Now, in 2024, that starts that all homes with Citizens that are valued at 600,000 or more from a rebuild cost standpoint has to carry flood insurance coverage. And then in 25, it goes 500,000, 26, 400,000, 2027, 300,000. And so with that flood insurance requirement, there is a high potential that you will end up facing a significant cost increase going to Citizens or staying with Citizens, whereas a private market carrier may not require that you carry flood insurance in the same way that Citizens does. I want to be cautious with that statement because we as an agency, we recommend every policyholder often we find that homes in, let's just say, the Ocala area that are not in a flood zone and not really a coastal flood risk, homeowners elect not to carry flood coverage, but if they're with Citizens, they're now at some point potentially going to be forced to. So if you'd like to speak to an expert about this, definitely give our team a call and we can help guide you through this. We can be reached at 727-498-5551 or email us at sales@hinsgroup.com. And to help the most, if you have a copy of the letter that Citizens sent you and a copy of your current declaration pages, we would need that to be able to give you basically advice on what to do. HH Insurance is a Florida-based homeowners insurance agency, and we have a five-star rating on Google with over 1,100 five-star positive reviews. And so there's an opportunity that we can help guide you through the Citizens process. We would definitely love the opportunity to talk to you. Thanks, and we hope you have a great week.